I'm going to tell you right now why I switched from being a value investor to doing primarily technical analysis. I'd say 75% of my decisions are technical, and influenced by about 25% fundamental. Now, before you value investors move on to the next video, hear me out. I think that I'm going to give you 6 arguments, 6 reasons, if you will. And I think, personally, I think they're pretty convincing. They definitely convinced me. And keep in mind, of course, there are many ways to be successful in the market. Any way from being a, day trader making 1,000 trades a day to hunkering down as a value investor and holding something for 40 years. This is just my personal opinions. It is not financial advice. Now, here's the context. I started investing in 1996, and back in those days, I thought that what you did was you bought a company that was undervalued, and then you waited for the market to discover its value, and then it went up, and then you sold it at a higher price. And I dived into the motley fool with their jester hats on, and I had this workbook of how to read income statements and cash flows and accounts receivables and accounts payables and all that stuff. And I figured it out, more or less, after many hours and books read. And by the way, if you want to skip the context and just get to the list, that's okay. So I kind of figured out how to do value investing, and I bought some stocks over the years that I thought were a good value. And you know what? Some of them went sideways for years. Some of them went down. Why were they going down when they were so clearly undervalued? Some of them went up, and I had no idea how high, I thought I knew what the fair value was, but I didn't really know, should I sell there? Should I wait for it to keep going up farther? Usually I just held it, then it started going back down again. One of them, Oil Sands Quest, oil sands company, the sand tars up there in where the heck, I don't even know where it is, Siberia or something. I was studying how to squeeze oil from sand, and the darn thing went bankrupt while I was holding it. And then also, I used to print out conference call transcripts like a madman. Read them, highlight things, underline things, circle things, file them in my file cabinet. I had files for different companies. But like I said, I really had mixed success. Which brings me to my list of 6 reasons why I switched out of being a value investor. And I maybe alluded to some of this in the context. Number 1, it causes you to buy stocks that are moving sideways. So you identify a stock that's undervalued. So what? When is the market going to discover that? You don't know. Maybe the next day, maybe weeks, maybe months, maybe years. Maybe the market will never discover how valuable that company is. Then you have dead money, and your money is sitting there for weeks, months, years. You are wasting, not only is your money tied up, but you're wasting valuable time, and time is the most precious commodity. Number 2, it causes you to pyramid down. Now hear me out. Dollar cost averaging is a very good strategy with the S&P 500 that's been returning about 10% for, 100 years, and possibly some, blue chip stocks, like maybe Apple, but even these don't last forever. But by and large, buying more of a stock when it's going down is really foolish, because you don't know when the stock's going to start going up again. Guess what? It may never go up again, or it might take 10 years to get back to your purchase prices. Zoom Video, amazing company, amazing stock. If you've been averaging down on this thing for a year and a half, well, guess what? Its business model has been cloned by Microsoft, Teams, and Google, etc. It might never come back up again, or it might get bought out for a paltry pittance. There's some nice alliteration there. I gotta pause and figure out what my next thing is. Yeah, okay. Now, Doing a pullback buy, where you do an initial buy, the stock pulls back 3%, this chart becomes stronger, and then it starts moving to the upside, that's different. That's different than averaging down and down and down and down. Number 3, knowing the fundamentals intimately and deciding a stock is undervalued causes you to become married to stocks and to ignore the price action. We all saw Facebook, aka Meta, going down last year, didn't we? Many of us didn't sell. Why? Because it's Facebook, right? Everybody has Facebook. This company's making money hands over fist. The fundamentals are great. And yet it kept going down. But I'm not selling. It's Facebook. Rinse and repeat. Well, it went down 77% with good fundamentals, right? And so you only needed for it to go up 77% to be at even, right? No, wrong. Losses compound. A 77% loss, you need for that to grow 300% to be at break even. That doesn't sound right, but it is. There's different little charts on the internet that will show you exactly this. Losses compound. Number 4, on the flip side, on the other side of the coin, it causes you to completely ignore stocks that are flying higher. Let me tell you a little personal anecdote. GameStop. I had heard little rumors that, actually, no, it wasn't even a rumor. I saw the breakout on GameStop at like $10. I went to the store. I did a little fundamental research. The store was empty. The shelves of customers. The shelves were half full of merchandise. The employees were not interested in greeting me or even helping me. And I just told myself, fundamentally, this stock, this company is going out of business. I checked the fundamentals, sales way down, EPS way down. I didn't buy it. You know what happened. It went from 10 to 100 or 200, something like that. I ignored it going up the whole time because of the lousy fundamentals. Number 5. The chart, the technical chart, has all known fundamental information and all future expectations of a company baked in. The price of the company, the price of the stock is reflecting that. So you don't need the fundamentals. Which brings me to 6, time. Now, it has taken me countless hours and studying thousands and thousands of charts to develop a keen technical eye on strong charts, weak charts, good breakout points, good sell points, etc. But now, when I can look at a chart and determine in less than a minute, probably less than 30 seconds, whether it is imminently buyable or as a hold or as a sell, whereas how long does it take to figure out if a company is fundamentally undervalued, overvalued? You tell me. How long does it take you to do that research? So here's what I do now. I screen stocks purely on technicals. I look for stocks with strong relative strength, near all-time highs, stocks that have gone up dramatically in just a month or two, etc. And then when I find a stock that is doing well or that is building out a beautiful base and looks like it is going to be viable very soon, then I check the fundamentals. Sometimes it's a turnaround play, like a lot of the retail stocks, which have terrible fundamentals right now and yet have gone up 50 or 75%. Sometimes it's a biotech that doesn't even have fundamentals. No revenue, no EPS. Make note of that. And I do a little smaller position because biotechs are riskier. But what I'm looking for is what I call the holy grail, if you will. The stock with strong technical chart that's a code 33. Code 33 means it has rapidly growing EPS, earnings per share, over 3 quarters or more, rapidly growing sales, aka revenue, over 3 quarters or more, sequentially, and growing gross margins. Now, if the margins are already at 80%, then I'm not so concerned about a big jump in gross margins. But if you have all three of those fundamentals growing, everything else in the fundamentals, it's going to be good. It really is. That's all the farther you have to look. And then when the chart tells you to buy, if the general market's good and stocks in the market are moving up, then you can go big. Then the fundamentals are back and you're strong technical stock. Lastly, before you buy, check for upcoming events, check for earnings, check for product releases, clinical trials releases. Don't get caught buying right before one of those things. And that, my friends, is why I stopped value investing and I do primarily technical analysis. And if you are interested in learning more about technical analysis and seeing what stocks I'm buying and watching, I have a Patreon membership. You can check that out in the description and in the comments. Every weekend I post my current portfolio and my focus list. Consider liking this video if you haven't. Let me know your thoughts on technical analysis and fundamental analysis. Maybe you still think that technical analysis is a bunch of voodoo, witchcraft tea leaves. That's okay. Share your opinion. Share your counter arguments. All right, everybody. Good luck. Take care.